It's the midweek edition of Business Morning on Channels Television, an hour of serious and relevant business talk. You're welcome. I'm Ini John Mekwa. Let's start from the oil space now. Prices eased today, taking a breather after 2 days of gains as investors wait for an assessment of full impact of Omicron coronavirus variant on global economy and fuel demand, as well as the effectiveness of existing vaccine. Brent crude futures dropped by 19 cents to $75.25 a barrel after settling 3.2% higher yesterday. U.S. West Texas Intermediate crude was at $71.82 a barrel. That's down 23 cents after gaining 3.7% in the previous session. Oil prices rebounded earlier this week from a collapse last week on rising optimism that the new Omicron variant will not cause major economic damage. The market is also focusing on Iran nuclear talks, tensions between Russia and Ukraine, as well as weather in Northern Hemisphere winter. Indirect talks between Washington and Tehran on reinstating their nuclear pacts resumed a week ago, but broke off on Friday. And the world's digital infrastructure company Equinix has acquired Nigeria's main one cable company and leading West African data solutions provider. The $320 million acquisition, tagged one of the continent's biggest tech deals this year, marks the pivotal entry point for the U.S. data center investor to the African market. In a statement, a main one cable CEO, Funke Opeke, says that the transaction provides the group with access to capital and networks to boost its expansion plans to meet data consumption needs in the region. The deal is expected to close in the first quarter of next year after customary closing conditions and regulatory approvals have been met. Now, Nigeria needs an investment of about $410 billion to achieve net zero emissions by 2060. That's according to the Vice President, Professor Yemi Osinbajo. He was speaking at the 2021 LPG Week in Dubai. He stressed that the importance of LPG as transition fuel source for developing economies.
Energy transition is tied to adopting and domesticating all forms of cleaner energy sources, from household use to commercial use. And these cleaner energy systems include solar for electricity, waste to energy, wind energy, hydropower, and of course natural gas. This explains our efforts as a country to ensure the successful implementation of our domestic LPG expansion initiatives. Our target is 5 million metric tons, and this requires at least $6 billion for the required LPG infrastructure. All aspects of the LPG value chain will certainly require investments, and we on our part, the federal government of Nigeria, are ready and willing to support investors willing to partner with us.
And Nigeria's premier and leading financial inclusion services provider, First Bank, has held its non-oil exports webinar series centered on finding opportunities that will keep reducing the reliance on oil as a mainstay of the country's revenue. At the webinar, the managing director of First Bank, Mr. Adeshola Adeduton, said that dollar inflows from non-oil exports could help shore up the national economy.
In the face of shifting economic growth for energy exporting countries, oil accounted for 88.75% of foreign trade in H1 2021, but only 7.49% of GDP in Q3 2021. Deliberating on the country's diversification from oil as an economic mainstay is now more important than ever. At this First Bank webinar, that's the thrust of discussions.
When you look at the challenges that we are contending with today, which is the scarcity of FX, we think and we believe sincerely that pushing export trade is the major way by which the country can work better by basically diversifying the sources of foreign currency inflow into the country.
With trade, ICT and agriculture now the top sectoral contributors to Nigeria's economy as at September 2021, The Nigeria Export Promotion Council says its zero oil plan is designed to take advantage of the African Continental Free Trade Area.
The first objective is to roll out policies for 22 major products that could generate up to 30 billion naira in foreign exchange.
The African Export-Import Bank is also lending its voice.
The central banks all have accounts open with Afrexim for settlement of BAPs. These central banks also then quote the exchange rates of the local currencies. So you don't have a problem. You sell in Naira, you want to collect Naira. You invoice in Naira. There is an export rate which Naira is traded with respect to the Kenya shilling.
When all is said and done, aggressive targets are key to building a sustainable non-oil future.
If in our own respective corners we don't act, our contemporaries in other African countries will act on us.
First Bank PLC says the importance of non-oil exports in Nigeria is critical as it remains a means of increasing the markets for producers and an opportunity to attract the much-needed foreign exchange earnings to boost the national economy.
Also, other issues now. The travel ban on one hand and dollar shortage on another. Aviation industry seems to be heading to an unpleasant festive season. To give us insight into the impact of these and more, we have the president of the National Association of Nigeria Travel Agencies, NANTA. We have Susan Akpore joining us in the studio. Good to speak with you, Ms. Akpore. Thank you so much for joining us this morning.
Thank you. Good morning to you.
Yeah. So this seems like this Christmas is looking bleak for the industry again, you know, just when we're hoping that it will be an opportunity to recoup from the happenings of last year. But let's start from the issue of the repatriation of fund, which is the challenge before we had the Omicron and the bans and all that. How bad is the situation?
Oh, it's actually really bad. It's bad because the airline started cutting off, us issuing ticket that does not originate from Nigeria. That's their own way of reducing the amount of their funds that it's in Nigeria. It was really, really bad. As bad as the extent in which we're hoping at the time that the repatriation of funds was like 50%. Actually, the airlines were not even asking for 100% of the funds be repatriated. They said they would have been comfortable with between 50 and 70%. Even if it's just 50%, they will be fine. But they were doing like 20%, as low as 20%. So it actually started getting really bad. It started with like 30, 40%, and it really dropped to like 10, 15% of their funds be repatriated. Hence the reason why quite a number of them took that decision to stop sales of tickets that does not originate from Nigeria. Okay,
so help us to understand. You said they would have been happy if it was like 50%. So what happens to the other 50%? How do they get their funds?
Oh, they will eventually get everything. Okay. What I'm saying is that if at a time, you know, their funds is being repatriated per every bidding period. So what they're saying is that if any time they go to bid, as in whatever amount they are bidding for, if they get 50% of that, between 50 and 70% of that, that's going to be okay. They'll be fine with that. Doesn't mean the others will not eventually be paid. Mm-hmm. It will, but the payments, if it comes at each time between 50 and 70%, they would have been fine.
Okay, so it happens that these funds are paid in bulk. So if as an individual, I want to buy a ticket from, you know, an airline outside Nigeria, and I pay of course, in Naira, right? So it is you as a travel agency's responsibility to get it across to the airline in dollars. You know, I want you to paint the picture for us.
Okay, all right. The legal tender for expedition in Nigeria is Naira. We're not allowed to do business not in Naira. So hence the reason why the airline can make us pay dollars. But we all know the tickets are domiciled in dollars, but all over the world. Then, of course, depending on your country, it's now being converted at the point of sale to Naira. That's why if you see your ticket, you will see a USD and you see an NGN. So we pay in Naira, actually. just like a client will come to me and pay in Naira, we pay the airlines in Naira. So now it's the banks of the airline and CBN, where they go to bid on their behalf. At each time they have to bid, that's when they go to bid for dollars to get their money converted to dollars and sent to their home country. So that's how it works. We are not the one that do the conversion.
Okay, it's
conversion
between when they go to the banks and the CBN.
And the CBN,
but
yes.
the CBN has, has continuously assured us that once you go through the right channel, you can get your dollar, you can get, official and legal requests granted.
Oh, yes, that's what CBN always says, but in reality, it's not the case. I'll give a classical example. Even we as an association in NANTA, we also pay for our international accreditation, yearly accreditation, and we pay in dollars. So in order to make it quite easy for our members, last year when I became president, we collect the funds in Naira from our members, and we go through the process the airline goes through. We go to bid for dollars so that we eventually transfer to IATA and all that. Last year, it took us 6 months to be able to eventually pay up just about $45,000. So because our banks, the money is with the bank, and they go to bid, this bidding happens to 2 weeks. If we as an association could experience that with just about $45,000, $50,000 thereabout, that we were trying to repatriate to IATA, and it took us 6 months to be able to eventually send the funds. So imagine what the airlines are going to when their own is running into millions. So the bidding comes every 2 weeks. Your bank goes to bid on your behalf because you have a legal right to do that. And when it comes, what eventually comes out as what you have won for that bidding day, it's always noted.
It's below what you asked
It's below.
for.
Like the very first bid we had when we had it last year, we bid it for $45,000, $50,000, and we were approved just $2,000. And I'm like, when my bankers gave me the report, I'm like, what am I going to do with this? So it just kept happening like that. And no, this bid happens just 2 weeks. So it kept lingering, but we had to just reach out to IATA. Of course, they were very understanding because they know what is going on. So it took us 6 months to be able to finish repatriating $45,000. So you can imagine dollars running in millions. So that's how it works. And that's what the airlines are going through right now. Actually, because of our experience last year, we didn't do a corporate bulk this year because my bankers were like, don't even try it, because the airlines are having serious issues. So who is going to listen to us that we're just paying for dues? So we stayed away from that this year because of that. So that's how it usually happens.
From your perspective, there's an obvious shortage of foreign currency
because
in the economy.
CBN keeps saying the money is there, go to your bank, the bank will do the right thing, they will bid and all that. But the banks go to bid and the report that comes out is usually not favorable. It's actually ridiculous a lot of times. Like one of the airlines that had actually promised us that they were not going to take any action, just overnight, it was like, bam. We were wondering what's going on. And when I was speaking with the airline, and they were equally shocked, and they narrated what happened. For instance, they went to bid for, hypothetically, $500,000, and they got us about $50,000.
10%.
Exactly. So that's led to that drastic decision. So I feel for the airlines because it's part of the BASA agreement. They must be able to repatriate their funds. They're foreign airlines. They're not Nigerian airlines. So their funds are not meant to be here. That's part of the agreement. And these funds are used to service the aircraft, even for the Nigerian staffs that they have working in Nigeria. Their money is being paid from the home country, the head office. So there's a lot going on, and that's where we are. The report was... When they reported to CBN, CBN was like, the funds are there. And they get to the banks, the bank says, we don't get the funds. So something is wrong somewhere.
Exactly, where are we missing it? Is it that the funds are there and the banks are hoarding it? Or giving it to illegal requests? Because honestly, we heard there are some speculative demands,
Exactly.
You know?
And you and I know this dollars is everywhere in the black market, the primary market. I mean, any amount you want, you go to the primary market, you will get any amount you want. So it's actually very laughable when in the black market, so to say, you get any amount you want. I mean, just a call and they bring it to you. And in the official channel,
though.
at a cost though, which is like over 100 naira different from the official rate at the bank. And you know, the airlines can't go with that rate because it's going to be a massive loss. Right now, even at the airline rate has been fluctuating. Seriously. I mean, it was stable for like 411 for a while, and it just jacked up to like 450 something, 460. Today is 459. So it's very unstable, and information coming to me sometimes some of these airlines they are being forced to go to the black market to buy their funds. So you can imagine me selling a ticket at 450 and they are going to go and buy at 500 and something because of the huge amount of their funds, and they really need these funds.
They need the funds.
So some of them are forced to go and buy some certain amount.
So at this moment now, what's happening? Is it that people can no longer get tickets that are not generated from Nigeria? What's the situation now?
Okay, the situations, there's what they call SOTI and CITI, as in tickets bought here, but the trip is originating outside Nigeria. So meaning, for instance, London, Lagos, London, and I issued a ticket from Nigeria here. So those are the tickets that are being affected. They are saying, you know what, I'll rather let these tickets, because they cannot access to collect dollars.
Yeah.
It's not allowed by the law, by the Nigerian law. So what they are now saying, such tickets, we want it to be issued in London. We don't want it to be issued there, because if it's issued in London, the money is there. They don't have any issues of repatriation. And maybe some other countries, is not all over the world that they have this issue. I think it's Nigeria and a few countries. But other countries, like in the US, you can issue London, ABUJA, London in the US. They don't have the issue of repatriating. And more so, US already use dollars anyway.
Yes.
So it's quite easy. There's no converting and everything. So those are the tickets that have been affected.
So how is that affecting you and me? I want to travel now. How does it affect me?
Okay, if you want to travel now, you have somebody that is coming in from London to Nigeria. You might not be able to pay in Naira. That's what is affected, because for me to be able to do that ticket for you, I'll have to do it from outside the country.
You're outside the country.
Yes.
And then I have to pay with the currency of that country. So I think it put the burden on the consumer to now get the foreign currency.
It puts the body, and now you can't go to the bank to get the foreign at that rate to buy that ticket.
Here we go to black markets.
Exactly.
So
and
more
market buying it for almost 600 naira.
More demands for black market. Well, there's also, of course, the travel ban, which the federal government is trying to fight against. That's also not spoiling business for you guys.
Honestly, the Yuletide, this holiday season is just like you said, it's been messed up. We're very hopeful. The business has actually picked up. I mean, picked up to 60% of what we did last year. I mean, 2019, not last year.
Last year was not a year to be referred to.
At this time, the last quarter of this year, we're already at 60% of what we did in 2019. It was really looking good. Everybody was already planning for a big holiday seasons and everything, and there go bam, and it's really affecting everything, sincerely. One of my clients on the flight this morning took a picture and sent to me, and it was like, Susan, the flights are empty. Of course, it's going to be empty because people had to cancel their flights. So much uncertainty, have to put their plans on hold, and so much burden on us. Now, we travel agency can't even have a peaceful Christmas because there's somebody somewhere that needs either a refund, that needs to know what's going to happen to my ticket. Am I going to use it? Am I not going to? So we are all on our toes right now. All travel agencies, we're on our toes, waiting. Oh, I hope my client is not going to call me. We're just there standing. Even we have also canceled our plans, even if we were not traveling outside the country. Because you can't be here and have, a peaceful Christmas because it's chaotic everywhere. Imagine millions of tickets being issued, having to reschedule. Some even when you tell them transit is not affected, nobody wants to listen because nobody wants to be stranded at the airport. Like, for instance, you can still go to the US. The problem is you going to London, going to the UK. Now, transit is not
That's for
affected.
now. We're hoping the US doesn't join the bandwagon.
For now. So transit is not included, and it's really tough convincing the client that, you know what, you can still go to US using the airlines because transit, and nobody wants to take the chance. Nobody wants to believe you. So everybody just wants to cancel, and they want refund. And we all know refund at this time is almost impossible. It will eventually happen, but not at this time. So you can imagine how chaotic it is, and it's not good for us.
Not good for the industry, because I know last year we had a lot of conversations about the loss in the aviation sector because of COVID, and now we have Omicron, and you know, this is also apart from the inconvenience of poking your nose at every point in time. You need to have your PCR. Even when you're double vaccinated, you go into isolation, quarantine, and things like that. Really not a good time for the industry at all.
Not at all.
Well, we do hope for a better.
Honestly,
we do hope some miracle happens.
You
can still have a good Christmas.
But they are looking at 20th, just 3 weeks, so we are hopeful. And the Nigerian government have been in discussions with them.
Yes, with the
private
UK
sector have been putting in a lot of pressure. Trust me, a lot of pressure on the UK government. So I'm sure very soon they will do the right thing, because that decision was not really
harsh.
Was harsh. It was uncalled for, actually.
All right, Susan, thank you so much for sharing this morning with us, and enjoy the rest of your day. Susan Akporiaye is the president of the National Association of Nigeria Travel Agencies. We'll take a break now. When we come back, we'll head to Apex Commodities Space. To stay with us is Business Morning on Channels Television. You're welcome back. Well, for the week ended December the 6th, the total value of commodities traded on the AFEX exchange dropped by 825 to about 302 million naira. The number of contracts also reduced by almost 100%, and the number of deals was also down for the period, although by a milder percentage, just by 11%. Looking at the ACI now, it was in the green, 1.58. As also the AEI was also more than 2% up as at that period. That's the 6th of December. Now, let's see the volume of contracts now. Maize was at about 5.3 million for last week, but for the weekend, the 6th of December, it was at about 181,000. That's a huge drop we see there. Soybean came from the red zone also last week, but it settled on the green zone over 53, almost 54,000 for the week ended the 6th of December. Paddy rice is struggling to come up at just about 3,000 contracts. Sorghum struggling too, same with cocoa, ginger, sesame, and cashew. Well, a whole lot of breadths we see in the volume of trade for the week ended. Now let's look at the prices of the commodities, starting with maize. High demand for maize these days. That's why we see a 5.71% increase in the price at 185 per kilogram. Soybean is next. It added 31 naira to hit 390 naira for a kilogram. Paddy rice follows suit as it adds 0.28% and lands at 220 naira. Sorghum unchanged, though not so much demand there, I guess. Cocoa in the red, minimal of 0.01% change in the price. Now we see ginger. Ginger is unchanged. That's for ginger. Unchanged sesame and cashew. 3 of them are unchanged for the week ended the 6th of December. Well, like Michael will always say, for more information, please check out FX online and their websites and their social media handles. Well, let's take the conversation further now. According to estimate, food demand will increase by up to 70% by 2050. That necessitates annual investments of at least $80 billion to meet up with that demand. And according to the World Bank, the majority of this must come from the private sector, not necessarily the public sector. In the light of these, there is a need to increase farmers and agricultural SMEs' productivity through storage and access to better technologies while increasing their resilience through climate-smart agricultural risk diversification and access to financial tools. Well, AFEX has an interest in this. That's why we have Yusuf Ogumbi, the investment manager at AFEX, to tell us what they want to do about this and what catches their fancy. Hello, Yusuf, good morning.
Good morning. Nice to be here again.
Good to have you again. So food demand is increasing, and the long-standing challenge of smallholder farmers being unable to obtain funding continues, underlining the need for immediate solution. What steps do you believe are necessary to truly fund the industry, and how can the sector prepare to receive them?
Thank you very much. So it's clear that we are facing a very significant challenge moving into 2015. So just like the world is trying to get to net zero in terms of carbon emissions by 2050, we need to ramp up food production by looking into 2050 as well. Just some numbers here. Nigeria is expected to reach 410 million people by 2050. And that shows you that if, as of today, we have some challenges with food production, we are just starting more or less. So we need to drive harder to get to where we want to be. But then, back to your question, I think one critical element we need to pay attention to is the way we look at food production, agriculture, the entire value chains. We need to actually change our perception about this value chain. So just a bit of, just to look at some numbers as well. Nigerians spend about 54.8 trillion naira on food expenditure on an annual basis. And if you bring that to per capita basis, that's around 260,000 naira per capita. And that's significant actually. If you have a business sector looking at this number, it tells you that the business sector is quite strong actually. So we need to go away from the perception of agriculture as a social story, looking at agriculture as a rural story, and rather look at food production and agriculture as a main business that can be done. Already we can see the impact of that change in perception. So if you look at 2015, 2013 up until now, you would have seen the ramp up we've seen in local production, but then we still need to do a whole lot more to get to our North Star. So basically, we need to change our perception. We need to change how we approach the sector. We need to bring in a lot of innovation into this space. We need to bring in a lot of technology to help us achieve this target. Don't forget, food security as it stands today in Nigeria remains a very big challenge. If we don't solve it moving into 2050, we won't just be having a lot more cases of rural poverty, but we would also be having a lot more cases of urban poverty. So you then get to see a lot of households that are food insecure in urban centers in the country. So we need to change our perception, bring in technology, bring in innovation, bring in a lot of smart people into this space. And then I think at that point we might start approaching where we want to be.
All right, so the World Bank identified that private sector players have roles to play in helping smallholder farmers to meet this increasing food demand. But how can we get the private sectors to extend finance to the agri space by leveraging on innovative financing instruments?
Yeah, we actually need the private sector. We need private capital to come into this space to boost agriculture, to boost food production. So if you look at what we have today, the average budgetary allocation to agriculture, food production generally in that sense, in Africa is just about 2.5%. And Nigeria is even lower. Nigeria is about 1.5%. And there's a Maputo declaration by the states, heads of states in Africa that says they will contribute 10%. So that's pretty low, honestly, looking at the challenge we are faced with. So the question then is, where else do we get this capital? We need to then look at ways, innovative ways to bring in private capital. And this we are doing at AFEX, right? So the first question what we first tell private capital holders, suppliers of private capital, is that First, the perceived risk is way higher than the actual risk in the sector. And if you leverage on very innovative risk management practices, you can drastically reduce this risk that you see in this sector. That's the first thing. The second thing is that this sector provides higher yield than most other asset classes that you see, than most other sectors that you see in this space. So you look at the returns that you see in the agriculture space and you feel like, why are more private sector capital holders not coming into this space? Typically, you get around 5% to 6% yield differential between the investment in this space versus investment in other spaces. You also look at some of the growth opportunities in this space. And I think it's critical that we mention to private holders of private capital that the growth potentials are huge, significant. So you look at the sector is resilient, notwithstanding the economic challenges that we see in this space, in the country and in the world in general. Come to think of it, when all went down last year, one thing everybody continued to do is we continue to consume food, we continue to eat. The consumption just moved away from restaurants and then moved to the households where we were cooking more. So this is significant, and we would like to remind holders of private capital that there are a lot more risk in risk management practices that we can bring to help them resolve the cases of the high perceived risk. That's one. Number two, we also need to let them know that the returns in this space is significantly higher, especially when you compound it with the impacts that you can also get from here. And lastly, the growth opportunities in this space are huge, significant, and they can always benefit from it. I guess if you look at a number of companies, a number of investments that have been made over the last 10, 15 years, I'm sure the investment in the agricultural food production space would outperform a lot of other investments in other spaces as well.
So commodity exchanges contribute significantly to the agri-finance opportunities. This, however, will remain a dream unless new products are developed to assist in the unlocking of finance. Which new solution do you believe are key to unlocking finance in the space?
So first of all, exchanges generally are meant to solve problems. If you look at the history of exchanges, you have significant problems in the country, in the space, in anywhere, in any place. You would expect exchanges to design solutions, design products that can help solve this problem. That's one. Number two, the primary work of exchanges is to allocate capital. So you have a number of people that, on the one hand, you have the suppliers of capital, on the other hand, you have the people that need this capital. So exchanges are meant to design products that would help to transfer or allocate this capital to the people that need them and ensure that they get the capital they need to solve these problems. And in this case, we need this capital to solve the problem of food security. So in our own opinion, we've worked a lot in providing short-term capital. So typically, capital looking at exports, providing capital for exporters, providing capital for farmers to produce, providing capital for processors to produce the food that we consume on a daily basis. But then we think a lot of that solution is still short-term, and we need to start to think about the long-term solutions that are needed in this space. Agriculture is typically a long-term game. Food production is typically a long-term game. So we need to start thinking about these long-term solutions that can help to boost, to solve this problem that we are faced with. So in our own opinion, moving ahead is deepening the risk management solutions that we have on the exchange, bringing it to private capital players to ensure that they are able to de-risk their investments. Number two is to provide long-term capital. So you provide long-term capital to provide opportunities to the likes of pension funds and also allow these companies, these entrepreneurs that are solving these problems to have some leeway to grow their businesses and ensure that the sector itself pays for itself, which we believe it can. So the next question, the next solution for us, as I've said, is deepening the risk management framework solutions that we have, and then bringing on board more long-term capital providing opportunities for these entrepreneurs and businesses in the country.
And as a leading commodity exchange, recently you announced a fresh $100 million bond. You called it the Food Security Bond. Kindly share insights as to how this is going to help to alleviate all of this we have discussed.
So Thank you very much, Ini. So like I said, if you look at the solutions we've provided, and a number of them we've discussed here, they've been very short-term in terms of their perspective. So our goal with the food security bond is to provide a long-term capital opportunity to entrepreneurs and businesses in this space, especially along production, storage infrastructure, to provide them the opportunity to get long-term capital to solve the problems that they are currently tackling. So in our own opinion, we think this food security bond will help to go a long way in solving the long-term perspective of capital provided to these businesses. That's on the one hand. So that's capital provision, right? So the second one is, so what kind of investment would this kind of bond be targeted at? So it will be targeted at providing improved inputs, improved facilities to production, providing improved technologies to production. Come to think of it, as of today, cereal production is just about 1.8 metric ton per hectare in Nigeria, just touching 2 tons per hectare, where we have over 6 tons, up to 10 tons in some areas in the globally. So we then see that there's a significant room to grow production, so that some of this fund will be provided in this regard. There's also the need for storage infrastructure to support this activity. As of today, Nigeria can only store 5% of what it produces versus a China that can store up to about 109% of what it produces. So that means Nigeria can't consume food produced in 2020, in 2021, because pretty much we've exhausted it. If we haven't exhausted it by consumption, we must have lost it through post-harvest losses. So this means that we need to also provide that storage infrastructure. And we think that's another way, this is another way that this fund will be deployed into. And in addition to that, you also have significant human resource shortfall capability in the sector. So you have a lot of smart people looking at other sector, but you also want to bring them into this sector to solve these problems. So we need smart people in this space. So come to think of it, we need infrastructure, we need technology, we need to drive up production, and we need the brains to drive up all of this. So all of this will be where this bond will be deployed to, and we think by the time we are closing out this bond, 10-year bond, it will help to, we'll be writing a success story at the end of the day.
All right, Yusuf Ogumbi, wish you the best, and we certainly will look forward to when the storage facility area of agriculture in Nigeria would have received a boost, and then, like you said, we will not have to consume all that we produce in a year. Thank you, Yusuf Ogumbi, Investment Manager at AFEX. Enjoy the rest of your day. Apologies for that mix-up. That was the end of AFEX commodities segment. We'll slide to the markets now and see what happened yesterday. Well, after 6 negative sessions straight from last week, we had a positive close at the market yesterday. The market closed at 0.02% up. The all-share index was 42,018.92. Market cap very close to the 22 trillion naira mark, closer than it was 2 days ago. And then when we look at the activity charts now, on the activity charts, we see that volume was in the green. It was up, I think, almost 100% compared to the day before. Value also about that, 6.63 billion naira compared to the day before. It was just the deals that was down a little bit less than it was the day before. Let's go to the sectors now and see how the sectors perform. Banking was up 1.13%. Remember the day before it was it was down 1.13%. Now it's up, and this is thanks to Zenith, ETI, GT Co. They had very favorable attention from investors yesterday. Consumer goods was down 0.52%. That's because Flour Mill lost 65 kobo from its share price, and Dangote also lost 50 kobo from its share price. Those are heavyweights in the markets. Industrial goods was it was in the green, 0.29%. Insurance, well, doing so well, 1.14%. Oil and gas, man, they lost yesterday almost 3%. Well, we shouldn't be surprised because Seplat shed 35 kobo from its share price. O&O shed 10 kobo from its share price. And so we shouldn't be surprised that oil and gas ended in the red yesterday. Well, let's go to other market now. NASD was also in the green yesterday. That's the OTC market. It was down 1.85%. The share index 731.62 points. Market cap 604.45 billion naira. When we look at the activity, just 16 deals yesterday, valued at 22.03 million naira. Now let's go to the FGN bonds, the federal government bonds. Yesterday had a total of 22 deals at the end of trading yesterday. The most favored was the 27th of March 2050. I wonder what the attraction was. 9 deals on that alone, followed by the 18th of March 2036. Also had they had 4 deals there. The total value of transactions on the bonds market yesterday was 7.65 billion naira. Let's go to the Treasury bill, the NTB now. The NTB had even more, close to that, so 21 deals, close to the FGN, 21 deals yesterday, valued at 26.72. The most favored being the 10th of November 2022, valued. It had 8 deals valued at 7.70 billion naira. And close to that was 27th of January with 7 billion naira. We had less deals on the 9th of December 2021. That's maturing this month. And it had 6 deals valued at 11 billion naira. Let's go to the CBN bills now. The CBN bills had only 1 deal yesterday, valued at 2 billion naira. That's the 30th of May 2022. And finally, OMO, we have 11 deals valued at 13.24 billion naira. The most favored being the 22nd of November 2022. This is maturing next year. It was the most favored yesterday, valued at 2.24 billion naira. Well, that's what we can do for the markets now. We'll take a break. When we come back, we'll do an opening call to London. Just stay with us. You're welcome back. Now we'll head to London. Almost 1 year after Brexit check-ins, it seems what the government once called teething problems have now become a chronic condition. Well, I think Juliana will paint a better picture of this and much more. Hello, Juliana. Good morning.
Good morning, Annie.
So Brexit delays to cross-channel trade is still on. We've talked about this, of course, quite a bit. This is in spite of a lot of agreements and meetings and all that. Well, what's going on? Bring us up to date.
Yeah, well, supply chain issues between France and the UK not improving. This is according to some data released this morning from the French Chamber of Great Britain. They've been speaking to about 400 companies, and the vast majority of them are showing that things are not improving. As you said, teething problems, what the Prime Minister, Boris Johnson, said would be teething problems at the beginning of the year, have become, towards the end of the year, a chronic issue. Now, according to 79% of firms that were participating in this survey, lots of them have now said that in the 3 months to September, it's costing them a lot more to send goods between those countries. That's up 6% on the previous month. Also, bureaucracy and paperwork at the border is getting a lot more difficult. And I think the reason why this has been flagged up now is because some long delayed post-border checks, more checks. So this is just Brexit we're talking about in terms of us coming out of the single market. But now there are going to be checks on goods. These were supposed to come in place a couple of months ago, but because businesses raised a red flag and said they were not ready, they've long been delayed, but they are due to come in before the end of the year. And now business lobby groups are asking the government to reconsider that because some businesses are still complaining. We know from data that we've been receiving over the past couple of months, trade between the EU and Britain, in light of Brexit, has fallen dramatically. But one of the main reasons is it's this issue at the border and making sure that the I's are dotted and the T's are crossed. And until businesses can get over that paperwork, business won't be booming.
Yeah, a lot of paperwork. We've started with this, and it seems like a whole lot more to go through. And talking about data, there's a new one indicating that the US has overtaken the EU as the leading destination for UK financial services exports. What does this mean for the UK?
Yeah, this is great news for the city and the square mile. I think they were pretty ticked off that they weren't really included in the withdrawal agreement between Britain and the EU, particularly as services, not just hospitality, but services in general. That is a huge contributor to British GDP. It contributes over 80%. There has been some upgrading of the square mile over the past couple of years. Fintech services are booming. We've got top-class bankers, and the private equity market is doing extremely well. And as Britain does try to transform into this post-Brexit global economy, we are starting to see some of these dividends pay off when it comes to the financial services market. According to the Square Mile's chief lobby group, the City UK Now, financial services that have been exported to Wall Street have finally overtaken the EU. I believe services contributed to about 34.2% going to the US compared to about 30% going to the EU. So this is certainly a good story. It kind of balances what we were just discussing about the issues over the Dover and the Channel. But when it comes to far more complicated, some would say more lucrative issues, it seems like Britain is coming out on top.
All right, good news for the UK. Thank you so much, Juliana. I will talk to you again at 1:30 during Business Incorporated.
Thanks, Annie.
So let's take a peep into the crypto market with Laddie Williams.
Yeah, Annie. Well, traders can heave a sigh of relief right now because the market is quite stable. And I don't know if you remember.
It wasn't a fluke yesterday.
Oh, right. Yeah, it was quite an incredible move yesterday. A big bounce, and it's still being maintained. But I don't know if you remember when we used to track the Red Fridays.
Yes.
Well, it seems those days are back again because we've had about 2 Fridays of extreme sell-off. So we'll be watching out for how this Friday closes. But right now, it's $2.36 trillion. It's up 0.83%. That's the 24-hour traded, it's down 21.77%. Bitcoin dominance at 40.02%. I've been watching on this Bitcoin dominance. It's looking like it wants to itch lower below the 40 range there. Price of Bitcoin stable here at $50,688 this morning. It's staying above the 49K region. So traders are allowing themselves get back into the market at this point. 24-hour volume, $32.14 billion traded in Bitcoin. Let's bring in Bjorn Martens now, CEO of Passive Income Token. Hello, Bjorn.
Hey, good afternoon, Laddie. How are you doing?
Great to have you, Bjorn. Well, the market is quite stable today, but I've noticed a couple of heavy sell-offs when it comes to some play-to-earn tokens. They've dropped a lot in the past week. How's it looking for you?
Yeah, great question. There are several reasons for this, of course. We have seen over the latest time that the metaverse, the play-to-earn tokens really have gained a lot of value over the time. And I see this as a healthy correction in the market. So the tokens increase in value, people take profits, so it gives new entry for new investors to come into the token. Another point can be not enough confidence in the project by the audience. If the development team can truly capture an audience, then the price will eventually stand on its own outside of market fluctuations. Play-to-earn games are still in their infancy, they're in the child's shoes. Over the coming years, we'll see a huge turnaround as we are seeing online marketplaces such as the Epic Store make room for blockchain games. In the long run, the mainstream market can help a much larger majority of game tokens survive various market conditions by the new utility cases these game tokens bring.
All right, but take for instance now, you know, the 2017, 2018 bear market, you know, it's still fresh in minds of a lot of traders. Take, for instance, we have another bear market right now. How do you think, you know, the metaverse tokens like the play-to-earn, the land, digital land, how do you think it's going to fare?
Okay, very good question. Now, over the last couple of years, even with economic uncertainty, the game industry has proven its strength. It's been growing over the time consistently. By combining games with groundbreaking blockchain technology, developers are able to create innovative and brand new experiences, which are likely to hold up much better in these bearish markets than normal meme tokens, for example. By incentivizing players with play-to-earn mechanics, developers are able to hit players with positive feedback loops and incentives that helps to make the games more enjoyable, more enticing to play. We see effects of these positive feedback loops with games such as Fortnite, Call of Duty, and they're utilizing the Battle Pass system. And it's likely that the next progression is going to be from free-to-play games with Battle Pass, they're going to go to play-to-earn games. And this is going to be a whole change in the world how we do gaming. And additionally to this, by investing in tokens with real-world utility, you can hedge against the bear market. As long as this token gains in value, it will be one of a kind, but that's because a lot of tokens don't have utility. And this is how they can make themselves stronger. It's going to be anything with a real utility, such as gaming, music, or even real estate.
Right. Well, I guess it's about value investing now. All right, Bjorn, thank you so much for coming on the program. As always, Bjorn is CEO of Passive Income Token. Enjoy the rest of your day. All right, looking at top of market cap there, we see it's all red, but the market is still quite stable there. We see Cardano is the biggest downer there, $1.38, down 5%. XRP still below $1, down about 1.64%. So it's quite a mixed market, but quite stable.
Yeah, quite stable. I guess investors can, like you said at the beginning, just have a sigh of relief.
Oh, yes.
At least for a couple of days. Thank you so much, Ladi. And that's it on the program today. Thank you so much for being a part of this midweek edition of Business Morning. Let's do it again, same time tomorrow. But don't forget to join us at 1:30 when we'll bring you Business Incorporated updates from the world of business. I'm Ini John Mekwa.